Hey guys, welcome back to another video by Fully Informed Trade, or Fi Trade for short, knowledge for everyone. My name is Alex Show. Right now I'm going to be talking about the UNG natural gas ETF. I'm sort of hanging out outside at the mall, like usual for a Friday. You're probably going to hear a bunch of background music and all this other stuff. But basically, UNG continues to head higher. And to me, this kind of comes across as a surprise. But after looking at the economic data behind the rally in the natural gas market, it really comes down to two simple factors. First of all, they cut back on the number of drilling rigs for natural gas. So basically, the supply side has more or less been reduced. So they're basically trying to inflate the value of natural gas by reducing production. The second factor is that there's also a lot of anticipated growth in demand for natural gas. So not only are they rinsing off the production of natural gas, they're also taking advantage of the future investment in natural gas power plants that is going to take place over the next 5 years. So both the demand side and the supply side are being taken care of, at least over the longer term. So that's probably what's giving the UNG, or the natural gas market, a lot of upside potential, and a lot of people are bidding it up at this point. I see some resistance at around 1950 for the UNG before it might pull back, and you probably want to take profits at that point. But overall, I don't see a whole lot of real. Perhaps maybe this market can continue to head higher. I don't really know, but I do know that natural gas, going forward, is probably going to be in perhaps a much longer term uptrend, and the other commodities are being sold relative to natural gas because, again, we have another competing factor, and that competing factor is natural gas. So a lot of forms of energy production are being cut, I guess, because 50% of future power plant investment is going to be based around natural gas. So that really reduces the growth prospect for coal, solar power, wind power, and other forms of energy production. I also want to mention the fact that even if the value of natural gas does go higher, it doesn't mean that natural gas stocks are going to perform much better, because while the price of natural gas is going higher, the amount of production they're doing is also reducing. So there's no real net surplus in terms of revenue for natural gas companies. The only thing that's going to change, though, is the value of natural gas, not necessarily the valuation of natural gas companies that are drilling for nat gas. So take care, folks. You guys have a wonderful trading session. I'll talk to you guys more on Monday.